Hey, my name is Tucker Kraus. Welcome back to my channel. In today's video, we're going to be covering Cameco's Q3 earnings report and a couple other things about Cameco. So let's not waste any time, get right into it. We're going to start out looking at Cameco's chart here, and so it looks very similar to URNM, obviously. And so, as you can see, right, they're kind of in the middle of this range right now with middling RSI, so overall their position is pretty neutral and could go either way. However, I'd lean slightly to the bearish side for two reasons. One, we had a giant bullish engulfing on Thursday's candles, as you can see right there. Second, though, is we recently finished a bullish factor with that giant gap from a few weeks back. When CCJ first fell, CCJ had a gap that had to be filled, which was bullish, and that's no longer there with a bearish engulfing candle in the middle of a range. Not looking amazing overall. Interesting we sold off so hard because, as we'll get into in just a moment, earnings were positive, but, regardless, I don't know why it sold off, but because that's off, it kind of makes me lean a little bit to the bearish side with all of that. Alright, now let's get into a quick summary of earnings. So this quick summary was posted by John Quakes from Cantor Fitzgerald, so let's read through it together. Alright, anyways though, so let's look at the focus points. So, strong Q3 2022 results. Sales volume totaled 5.3 million pounds of U3O8 at an average realized price of 46.30 per pound, which is unchanged quarter over quarter, driving earnings per share adjusted and cash flow per share of 3 cents and 12 cents versus consensus at 0 cents and 12 cents respectively. For their term contracts, right, because we know Cameco loves their long-term contracts, with the Q3 results, Cameco reported that it has advanced contracting discussions on another 27 million pounds of U3O8 and 7.5 million pounds of KGU, and if that is all finalized by year end, it would bring up total material contracted in the year up to 77 million pounds U3O8 and 14.5 million pounds KGU. And guidance increased from Cameco. So for the 2022 year, CCJ increased its average realized U3O8 price outlook from 56.60 to 56.90 and its spot volume purchase outlook from 14 to 16 million pounds U3O8 to 16 to 18 million pounds of U3O8, supported by its expanding long-term contract book. And the last one there is just their buy rating. So bottom line, it was, positive, of course, right? Because they beat. And along with, more contracts and these sort of things, right? Because we'll just read through it here. Positive. Cameco posted a revenue and an EPS beat in line cash flow per share and an advanced discussion on 27 million pounds in new U3O8 long-term contracts. This is a step change higher from the 50 million pounds signed year to date as of the last update less than 2 weeks ago, right? So that's definitely, big news, right? That's about a, or well over a 50% increase in total long-term contracts if these discussions are finalized, which is, pretty big. 27 million pounds, quite a bit of uranium. Not to mention Cameco increasing their price outlook on uranium, although it's still obviously very conservative. They still below $60 per pound, and, moving up their purchase outlook and all these sort of things, pretty obvious what that means. It's bullish for uranium, right? Supply is getting tighter and tighter and tighter. But I want to cover the reason for that giant gap, which was Cameco's acquisition. I don't fully understand it, but hopefully I can describe the basics for you. So essentially, we dumped hard because a ton of dilution was required for that deal to go through. And if you're wondering what that deal was, it was to buy Westinghouse Electric Company. And Westinghouse Electric Company, it offers nuclear products and services to utilities, including nuclear fuel, services and maintenance, instrumentation, control, and design of nuclear power plants, etc. So, from what I understand, it's essentially like just a services company for, nuclear reactors. And that's obviously very interesting since Cameco is obviously a miner, not a servicer of any sort. So it could definitely be interesting to see how their businesses combine and interact. So essentially, we dumped hard because a ton of dilution was required for the deal to go through. I think it was made worse by the fact that it doesn't really even seem like a good deal. Westinghouse filed for bankruptcy a couple of years ago and it's gone through multiple owners and sales over the past decade or so. Not signs of a stable or successful business, of course. Not to mention, Cameco didn't even get a controlling stake. They got a minority stake of Westinghouse with 49% ownership. Overall, it seems like a poor deal in my incredibly uneducated opinion, but Cameco is way smarter than I am, so they'll probably be able to figure something out and saw it has a good deal. Though, definitely on the surface, I can see why investors sold. Doesn't look good to me, and I can see why it wouldn't look good to a lot of other people. But again, Cameco, I imagine they know what they're doing. So anyways, yeah, Q3 earnings good, chart and deals seemingly not good. But who knows? I could be totally wrong. We moon tomorrow, and that these earnings were secretly bad for whatever reason, and this deal is actually the best deal ever made in the history of deals. Who knows? Anyways, this is not financial advice. Do your own research. Thanks for watching, and we'll see you next time.